What's up everyone, this is DOVYFX here, and in this video I'm going to be analyzing US30 and gold charts to get ready for next week. So enjoy, relax, and let's get to it. Alrighty, so really quick, hope everyone's doing amazing. We had a banger week last week, week before, amazing weeks we had. And I'm just ready to keep it going. Price action looks better and better every day, cleaner and cleaner every day. So hoping for even better and the results next week. Once again, if you're new to this channel, hit that subscribe button, hit that like button if you enjoy the content, so I can keep this going. And if you want more information about everything that I do, education, Telegram groups, you can check out the description. And that's all I have. Let's get right into the charts right now. So let's look at US30, right? As if you have seen my previous videos, you know that I am all about simplicity, and I'm all about just clean charts, clean price action, nothing too complicated, because as a trader you always need a lot of energy to deal with your mentality, with your psychology. So I like to keep my technical trading simple. So looking at the daily time frame, US30 is bearish. It's very bearish, and it's gonna be even more bearish when I go down to a lower time frame. But just every time before I do any type of analysis, I look at bigger time frames to kind of have an overall understanding of what's going on in the markets in the bigger picture. So obviously we have lower lows, lower highs, lower lows, lower highs, lower lows, and possibly a lower high before another low. And I'm gonna show you later on where my targets could be. So overall bias on the daily time frame is clearly bearish. We have rejections of a 20 moving average and rejections of a 20 moving average on the daily time frame. So now, as I scale down to a lower time frame, there's a couple crucial things that led me to a decision that I'm going to be looking for short positions on US30. So the first thing was that we broken this a higher low, right? So let's kind of zoom in, and as you can see, we have higher high, a higher low, and a failure to make a higher high, right? The price pushed down, and it didn't just push down, it also broke this higher low with a nice engulfing 4-hour candle, also breaking below both moving averages. So that's the key point on the 4-hour time frame, is that the price failed to break above and close above this high right here to make a higher high, and also broke this higher low on the left. Now this is going to be my 4-hour zone, and if I scale down to a lower time frame such as 1 hour, another thing that we can see is a cross of both moving averages. So blue moving average above red moving average indicates bullish pressure, and then we have the opposite. When the blue is below the red, we indicate the bearish pressure. So that's another confirmation to my short bias on US30. Now for the trend line traders, I can also draw a trend line, and as you can see, it was also broken on 4, on 1, and on 2-hour time frames. And this is another confirmation for my overall bearish perspective on this chart. So let's go. Yeah, that's 1 hour, that's 30 minutes. So every time I do any type of setup, I look for any type of setup, I first set my overall bias of, am I gonna be looking for short positions, or am I gonna be looking for long positions, by identifying the market structure, by identifying the market trend, because I always tend to follow the trend, right? So now if I am looking for short positions, you may ask a question, okay, so where is your entries, where you will be looking for your short positions? And I have a very nice answer to you. This is gonna be my supply zone that I'm going to be willing to take shorts from. And it's a really nice zone because of two things. I always look for two types of zones. I have two types of supply and demand zones: long wick supply and demand zone, and then distribution supply and demand zone. So here is an example of a long wick supply and demand zone, and this is an example of distribution supply and demand zone. So we basically have two in one, right? So now this retracement on the open, if this happens, the price comes to the zone, I'm not just gonna be looking to take shorts right off the get-go. I will want to see some rejection, some candles, and some bearish momentum. But to be even more precise, for the setup to be even more probable, I would probably wait for the 4-hour candle to close back below this 4-hour zone. That tells me that because the price comes back up to the zone, it's a good confirmation. But what's telling me something bad about it is that we're gonna be back above the 4-hour zone that I have right here, right? So the best setup that you can look for is a retest of this and then 4-hour close below the zone once again. This would be a very high probability trade to the downside. So now, since I found my entries, where are gonna be my targets? And for my targets, I have a zone on the daily time frame, and this is a great example of the long wick demand. This is my long wick demand right here, and as you can see right here, just couple weeks ago, the price rejected kind of off of this level, but it didn't really touch it all the way. So I would love to see the price come down to the zone, and it's not just that, we also have a round number of 32,000. So people that trades US30 knows that US30 really tends to like those round numbers such as 30,000, 32,000, 32,500, and so on and so on. So that would be a great target to look for, right? So this is kind of my analysis on US30, right? If we go back right to it, so three scenarios. The price can just kind of find support here and bounce. That's okay if that happens. Then maybe I'm gonna change my perspective and look for longs, but unless it happens, I'm not gonna change my mind. The second scenario is what I expect: the price come to the supply zone, retest it, and then go down to this daily zone to finally test it, and maybe then bounce to the upside from there. And the third scenario is the price just melts down before any retests. So we have three possible scenarios. One of them are 100% are gonna happen, right? The price is either gonna go move up or down. So since I have my overall bias bearish, that's why I'm gonna be looking for short positions from here. I'm not gonna be looking for long positions here to the upside, because that's why we did the daily and 4-hour time frame analysis. We identified that overall trend is bearish, so I identified and I decided that it's more probable that the price is going to go down than the price going up. So in the long-term perspective, you're going to be right more times than wrong, because you just follow the trend. So yeah, that's going to be my main setup for US30, and if that doesn't happen, then I'm going to come back, clean my charts, do my analysis all over again, and that's it. So basically setting my alarm at the zone, I'm going to wait, I'm going to see what's going on, and then we're going to continue from there. Now let's look at gold. Once again, going back to the daily time frame, we are clearly bullish. First thing that I see on the charts is the 8 moving average, the blue moving average. It has served as support multiple times, and on the daily it looks like we closed above it once again, found support right there, and we can expect that the support holds and we continue to the upside. So Since we have such a strong bullish pressure, it would be stupid to look for shorts. You could get lucky at some point by taking shorts and making some money, but it's just gonna be 1 or 2 times out of 10 or out of 20 where you want to be the odds, you want the odds to be on your side, and the odds are gonna be on your side if you follow the trend. So daily clearly bullish. On the 4-hour time frame, we have a beautiful long wick demand right here that the price beautifully respected right here. Strong rejection, strong momentum to the upside, and push to the upside. So you might say, okay, maybe now it's a great time to take longs. Yes, maybe it is, but I'm gonna tell you what I prefer in just a second. So right now you might look at the charts and see, oh wait, this could be a head and shoulders pattern. Yes, it looks something like it, but we have a neckline right here where you can see the price broke it, try to retest it, but it kind of continues to the upside. So what would be the best case scenario for you to take a long trade is by basically invalidating for the price. You wait for the price to invalidate this head and shoulders pattern by breaking above the shoulders and retesting them. So it's not just going to be the trend, right? It's not just going to be the zone. It's not just going to be, you know, moving averages. It's also going to be a invalidation of a bearish pattern. That's another very strong confirmation. So basically what I'm going to be doing, I'm not going to go to even further analysis to go to a look at a lower time frame. I'm just going to set alert here up at the upside and just wait. Once again, it could definitely just, you know, crash to the downside or whatever, but just looking at the bigger picture, just looking at some patterns, just looking at some zones, it tells me that it wants to go up. So I'm gonna wait for the price to prove me right here that it wants to go up, and I'm gonna take that trade over there. So that's all I have today. Gold and US30 analysis. Hope you enjoy this. Hope you learned something from this. And if you enjoyed this type of content, please once again hit that like, hit that subscribe button, and check the description for my courses, for my Telegram links if you would like. And I'll talk to you soon. Peace.